All right, back to work. Break time is over. I missed you guys last week. By the way, hope you guys had a fantastic week last week. And of course, hope everyone had a profitable day in the markets today. Now, what is going on with these markets? Speaking of markets, right? Because it seems like we're getting these big move down, big move up. Everything seems to be very chaotic right now. But I'll tell you though, zoom out a little bit right now. And there's one, I think, pretty obvious clue that are telling us, first of all, why the markets are behaving so erratically right now. More importantly, though, how we can make some money trading these wild markets tomorrow morning in our trade room. So I have a handful of trades, 4 or 5 trades I'm watching for tomorrow. We're going to cover all those trades in this video tonight. By the time we're done tonight, you'll have a roadmap to make some money on Tuesday morning. So charts are all prepped up. Great to be back here once again on the YouTube channel. Enough of the intro though. Let's go make some money on Tuesday morning. S&P and SPY are all ready. Oh, the Nasdaq and the triple Qs are ready. I have 2, I think, really pretty obvious clues right now that are telling us where the winning trades are waiting for tomorrow. One of those clues is right here on the 60-minute, these hourly time frames. I like to use these 60-minute charts for the overall directional bias. So bullish overall on the S&P and SPY, bullish overall on the Nasdaq and the triple Qs. This gives us the overall directional filter, the overall directional bias. It's one of the most important clues on these charts, but it's not the most important clue. I have one, I think, even more important clue, because we all know direction right now. One more important clue on some faster time frames, some tick charts. They'll help us time the right entries and make sense out of this chaos right now. Before we dive into those tick charts that we'll talk entries for tomorrow, let's check schedule for tomorrow. There's no major news really until later on this week. Tomorrow, of course, is Tuesday. No major news tomorrow, but keep in mind, we are kicking off earnings season. We got some big earnings coming out on Wednesday from Tesla after the close. A lot of big companies reporting earnings this week, but the only one on my radar is that Tesla earnings after the close on Wednesday. So we'll talk more about that tomorrow night on the video. So wide open news day for tomorrow. Let's get back to our charts though, because it's good to know when or when not the news is, but the money is made, of course, on these charts. I mentioned earlier, there are 2 pretty big clues right now. One is the overall bull bias here on the 60. I like these hourly charts, but again, we're not going to trade off these, right? Very difficult to find entry setups and time entries on a time chart. I like to use tick charts. Tick charts, I think, make pattern recognition a hell of a lot easier. All the time frames, by the way, are in the upper left-hand corner here tonight. That 7,000 tick chart there, upper left-hand corner. And in case you're watching for the first time right now, welcome to the channel. That is the 21 EMA. As you can see, it's pretty much the only indicator I use to find lots of winning trades each week. There's one really big clue here on these tick charts right now, and it's basically this big range right in the middle. Now, ranges. 2 things you want to remember about ranges. First thing is that ranges are magnets. A lot of volume piles up in the middle of that trading range. The second thing is that ranges love to rotate. They rotate up, down, back and forth we go. So if we understand that we're bullish overall and we're trading basically inside one big trading range, this of course helps make sense of why we're getting such strong runs down, up, down, and then now back up again. We know where this market wants to go now. So knowing that we're in a range bound market right now, there are 4 types of trades I'm looking for tomorrow. One of those types of trades is a bull trap off the high. If I can get this market going higher here overnight, this is not a great place to be a buyer. The range below us is a magnet. So now we're overall bullish, so I can't go picking a top on this. I'm not going to blindly sell off that high. I would love to look for a classic bull trap up here. Let the buyers try once. Let the buyers try twice. Now watch how this pattern sets up. It's a lower low in price and a move right above that interim high, a strong red candle closing below that 21 EMA, and that is your entry signal. Lower low a trap above that high, strong red candle closing below that 21 EMA. That's your signal to trade that rotation back down again. Now, a word of caution. These are counter trend trades. Whenever I go against the overall direction on the 60-minute time frame, I like to use a half size position, a quarter size position. On the same idea with that, if you understand that ranges like to rotate, I would also like to be a buyer off the low of this. Now, we're overall bullish. I can be a lot more aggressive on the buy going lower. If I can get this market to run back down to those range lows again, this is where I'll use not so much a bear trap, but what I call a failure pattern in our free video classes. Again, I'm not going to pick a bottom on this because for all I know, it'll keep on going. I don't know how far that move will go lower. It may come all the way to that 58.50 area, which is a big low from 2 weeks ago. But the bottom line is this is a horrible spot to be a seller. If I can see some rookie sellers coming in, trying once, trying twice. Now think about this. The reason why I like to use this 2-try rule is because once those bears, once they get short twice now I know where their stops are. And think about this, guys. If you're caught short and you get stopped out, what happens? You get squeezed, right? A stop squeeze, a stop run. You buy your way out of that short position. This is a much more aggressive entry. Now, I could look for a bear trap down here. A bear trap would be bears try once, bears try twice, and we get right below a prior swing. See, prior swings, the difference there? Prior swings, that's a technical bear trap pattern like I teach in the free video course. I would not argue with that at all, but I can be a lot more aggressive because in this situation, I'm buying off support in an overall bull market, right? So bears try once, bears try twice. My goal here is to run those stops. Now, one of my favorite follow-up trades after a failure pattern like this is a technical bear trap. As we try to rotate going higher, look for some separation off the moving average, a shallow pullback, higher high in price. And again, these are simply this is a technical bear trap, right? Because bear traps are used in lots of different ways, right? A technical bear trap. So on the lows of this trading range, remember the range, it wants to rotate back and forth, right? Rotate back and forth here. So again, it'll be a failure pattern, then into a technical bear trap pattern. I mentioned earlier, I've got 4 trades here I'm looking for tomorrow. These are 2 out of those 4 trades. One was that bull trap, or we call it crown reversal pattern off the high. Again, half size trade, quarter size trade. The second one here is that failure into trap combination we talked so much about in our free video course. Now, I want to talk about trade number 3 and trade number 4 here in a moment, but let's slow down for a moment first though, because I know that most of you guys and gals watching right now, you know these patterns already. You're making money with failures. You know why we love traps and ranges so much in our trade room. But I'll tell you, if you're watching for the first time right now, this might be a brand new language to learn, a brand new strategy you want to learn more about. So I teach this entire roadmap. I have a ton of examples of failures, bull traps, bear traps, and a whole lot more. I teach the entire thing in our free video classes. I'll put a link up top here for you, upper right-hand corner. Grab that link that popped up there and take that free trading course, because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room that tells us where the winning trades are going to be each day. More importantly, I want to teach you my 4 favorite entry patterns, help you time better entries, start making more money. Guys, the markets are way too good right now not to be making consistent profits. If you're tired of missing the best entries, if you've lost your confidence in your current trading strategy, hit that link that popped up there. Take that free video course. Everyone loves all the trade examples of traps and failures I include inside that free video course. It's perfect for anyone who's serious about making money in these markets. Also be aware too, guys, I'm going to put all the important links we talk about tonight in the description of the YouTube video. I'll put my free class links down there. Definitely start there first. Learn the roadmap. Everyone loves the free video course. Don't forget too, we trade together every morning at 8 o'clock Eastern time. I'll put trade room membership membership links in there, and hopefully I'll see you sometime soon trading with us in the morning trade room as a member. And don't forget, I post a lot of updates, charts, videos, mindset stuff on Twitter, or X as they call it these days. If you're on Twitter X, give me a follow. Again, all the important details you need to learn more and hopefully earn a lot more are covered down in the description of the YouTube video to learn more there. So we've talked about so far, we talked about 2 out of the 4 trades I'm watching for tomorrow. Another one of my favorite trades, trade number 3 for tomorrow, would be, let's say we go higher here and we don't get that nice 1-2 bull trap off the high. A lot of times what happens is with these ranges, we get these really sharp V tops and V bottoms back and forth. If we run up and we see a sharp run back down again in this situation, I won't get that bull trap to sell short. That's kind of the goal. The goal is to trap the buyers in, use their stop losses to fuel that move back down again. We may not get that entry pattern. Sometimes we don't. If it runs up and gets whacked back down again, keep an eye out for this V-top reversal pattern. V-tops almost always begin to grind down. Now, this is where understanding where the market wants to go is so important, right? It's a range. So we know the market wants to rotate back and forth, top to bottom of that trading range. In this case now, watch closely. I'm going to draw a trend line off these lows. I'm going to bring that trend line up top and find a channel. Now, very, very important. Look left, find one of these prior swings that lines up around the top of that channel, and I want that first test is the best test. Now, this could be any of the entry patterns you guys are learning inside the free video course, right? It could be a bull trap, like I'm showing you here, a buyer failure. It could be a pullback combination, even a strength trade as the market rolls lower. And again, if that doesn't make any sense to you right now, it will soon once you get into that free video course I mentioned earlier. So a V-top reversal, these can be difficult on the emotions because as they roll back down again, that little voice in your head will say, come on, get in, you're missing it. Your patience is rewarded on these V-tops. Remember, don't miss that first test. First test is the best test, and you better leave that runner for that rotation all the way back down again. The same pattern here, by the way, can be applied to the downside too. As we go lower here, I mentioned earlier, I can be a lot more aggressive on an entry like this. Bears once, bears twice, with a failure pattern, failure into that bear trap combination we see so often in our trade room, right? Again, failure pattern is the best one because now I can buy low, risk small to earn large on that rotation back higher again. But what if we don't get it? What if we don't get that 2-try failure pattern there? What if we run lower? And again, it could be here, it could be here. I honestly wouldn't mind if it goes all the way to that 58.50 level because that is a big low back there, right? I would love to go down, take that area, and then boing, right back up off that low. When it comes to V-bottoms, right? V-bottoms is pretty simple. A V-bottom off that low, if we don't get that 2-try bear trap down there, if it V-bottoms off that low, watch as it grinds going higher. And again, that voice in your head is going to say, you're missing it. But I'll tell you, most of the time, you're not missing anything. All you're doing here is missing out on chasing a loss going higher. Mark that high, bring it down off that low right now. Remember, look left, find some prior swings. And again, I want that first test. In my experience, it's very difficult to lose money when you're getting in. Now remember, it's a range market, right? Ranges want to rotate. So range rotation, the first test off the low of that channel, and then again, right below that prior swing. So range rotation, first test of that channel, and again, the break below, the entry below that prior swing, those 3 aspects, very difficult to lose money on that bear trap or that seller failure pattern or that pullback combination, strength trade. I wish I had more time on these videos to go deeper into the actual entry tactics we use in our trade room. But again, that's why I give you guys that free video course to learn more, see more examples would look like on real charts there. So that V bottom reversal. So V top, right? V top reversal, V bottom reversal, bull traps off the high, bear traps off the low. Keep trading that rotation. Now, here's a question though. What if we get a big breakout, right? What if we get a big breakout going higher? And what if they really drive this thing back down into that 58.50 area tomorrow? I have a couple more trades I want to talk about right now. Let's go to the Nasdaq though. The Nasdaq course is getting lonely. The Nasdaq is actually an easier chart right now than the S&P here. Now, before we talk Nasdaq, if you're enjoying this video right now, please help me grow this channel by hitting that like button, subscribing, and sharing this link with other trading buddies. That small action takes barely any time for you today, but it makes a big impact on this YouTube channel because YouTube, believe it or not, rewards me every time you like, share, and subscribe. I know we're all busy people these days, and I appreciate you guys spending a few valuable minutes every evening here with me on these YouTube videos. So thank you so much for hitting the like button, subscribing, and sharing. Thank you for your support. Now, let's talk Nasdaq. I mentioned earlier on the S&P. The S&P was overall bullish. The Nasdaq is the exact same scenario. You probably don't need me to tell you we are an overall bull market. Go down to our tick charts though. Again, the hourly chart is great for overall direction, but I would never want to trade a time chart like that in our trade room. This again is a 4,000 tick chart in the upper left-hand corner. And once again, the 21 EMA is all you need. There's one very big clue here on the Nasdaq. We had a big move down, a big move up, a big move down, a big move back up. Whenever we see big moves back and forth like this, anytime you see big move, it's always going to be a range involved. That range appears to be right in the middle of that chart. Now, why is it important? Well, because we know that ranges, they act like magnets and they love to rotate. We talked about how we can go up, look for bull traps above the high, that lower low in price, that bull trap high, that short back down. We talked about that V top, right? That V top and that grind move down. Find that new channel. Don't miss that first test off the high. We covered that. And again, don't forget, because we're overall bullish, these short side trades, at least in my world, these are half size positions, quarter size positions. If you're not making money going with the trend overall, it might be zero size positions. Let's focus on making money off going with the trend first. On the buy side here, again, I can be a lot more aggressive. It's a failure pattern, right? I wouldn't argue against a bear trap, but bear traps, as you guys learn in the free video course, require us to get below a prior swing. Whereas a failure pattern, I'm basically buying right into stop loss. We talked earlier about a failure pattern, then into a, what was it called again? Called a bear trap combination. Remember, the trick to this one is don't pick the bottom on this, wait for that breakdown, and then look for separation off the moving average. Remember, separation equals strength. We talk about this a lot, of course, in our free video classes, but separation off that moving average, when it pops back higher, that shallow pullback right there barely pulls back to the moving average. A great example right there, right? Once we run higher, that shallow pullback separation, no surprise there, everybody is buying below that low. So same basic idea here, going lower. And again, if I can get that V bottom off of that low, the V bottom are a bit more difficult on the emotions, but once you know how to trade it, once you know how these work, at least in my world, it becomes a whole lot easier to wait for that first test off the low. First test, of course, is always the best test. Now, you'll notice right away in the Nasdaq right now, there's a lot of momentum now going higher. How could we trade this if the market runs higher here? We may be able to use this range as a breakout pullback. Imagine now we don't hold the highs and rotate back down again. Imagine now something comes out overnight, the market makes a strong breakout running higher. Whenever we see a breakout of a trading range, we can then look for a breakout pullback off the top of that range. Basically, what was resistance becomes an area of support. Now, when I think about a breakout pullback off the trading range, the first thing that comes to mind is a two-legged pullback. So if we go higher here, and we really start to make some strength going higher here, I'm going to look for ways to use this trading range as a breakout pullback. Now, when I think about breakout pullback, I think about a two-legged pullback. A two-legged pullback is just like the name sounds. It's one leg, ideally below the 21 EMA, a second leg. Now, in the free video course, I talk about measured moves. Think about a measured move that goes a bit too far, right? A 100% extension is a measured move. Think about a measured move that goes too far. Now, of course, I don't have a crystal ball. I don't know exactly how big those legs will be for tomorrow, but that is the technique I'll use to find a support area. Now, support is fantastic, but I'm not going to go picking the bottom on this, right? We're not going to pick a bottom. What we're going to use that same failure into trap combination. Bears try once, bears try twice. Again, I call these failure patterns in our free video course. Basically, the bears, the sellers, are trying to keep this going lower and they fail. After 2 attempts, I now know where their stops are. If you're caught short and you get stopped out, I can buy into your stop losses for a squeeze back up to retest the high. Stops get triggered. Buyers come back into the market. Let me make that run back higher again. And remember, don't forget, if you want to make more money, don't trade more often. Don't trade more frequently. Get better at adding to your winners. And one of my favorite ways to add to a winning trade is to go adding more on one of these bear traps. Remember, it's all about that separation off the moving average. Separation off the moving average. Higher high in price, trap right below that low. It's a bear trap like I teach in the free video course. Failure, again, two-legged pullback. Don't pick that bottom. It may keep on rolling here, right? If it does, if we do roll up and get whacked back down again, think about that V top I mentioned earlier on in this video, right? That's an easy way to capitalize on it if it does keep on rolling lower, right? If it does end up faking out, breaking out above that high here. That is what I think about when it comes to a breakout pullback. And one really cool thing about breakout pullbacks is the size of that breakout leg. Write this down. Anytime we see a range breakout, the size of the breakout leg is used as a measuring leg. So I can take the size of that breakout leg, I can then pin it down at that low. Another way to make more money is to get better at holding on to your winners longer, right? So holding that runner up to that measured move. I will always take some off here at the high of day in that situation, half off, 3/4 off at that high. But then again, think about the size of that move, right? That measured move. That will give you an idea of where to leave that final runner to cash a bigger paycheck. That's one more variation. This will also apply not as easily on the S&P, but will also apply on the S&P if the S&P can also make a big run. It needs to go a little bit further though on the S&P though. S&P is a little more space to break through up overhead. Another variation of this on the Nasdaq will also apply to the S&P. I mentioned earlier that I would love to get this mark going lower here and then buy a failure pattern down here, right? And squeeze those stops. I love that trade. Oftentimes what happens though is we'll get that 2-try failure. I always use a 1-to-1 first target. You guys, you'll learn more about that, of course, in the free video course. We see a lot of these each month in our trade room where we get that 2-try failure. We get our first target filled. I get that stop moved up to point of entry. It's a winning trade. It isn't a losing trade. It's a winning trade now. What happens though is it comes right back down and takes out that low. Remember this, guys, double bottoms in an overall bull market are a gift to us traders. They really are. They're not reversals by any means. So if I can get lucky tomorrow, maybe not that lucky, right? But if I can get lucky tomorrow and get a retest of that low, same exact idea, right? Same thing here. And keep in mind too, right? It could be here. It could be a bit lower than that. It doesn't need to be right at that double bottom, but once to go back to retest that low, anybody who sold short up here, they're taking their profit. They're buying their way out of those positions at that low. This is where I can trap those bears in once, twice, that same thing, right? That same failure into separation off the moving average into a bear trap pattern right below that low. And I'll tell you, in these situations, oftentimes these double bottom retests like this, they're oftentimes the most lucrative trade of the week because, again, everyone's getting trapped in. Rookies are trapped in. Long-term bears here are getting their profit targets hit. They're buying their way out. So these are oftentimes the most lucrative trade we find in our trade. Remember, leave that runner, right? Leave that runner. The amount below, the amount above. If you want to make more money, this is one of the many reasons why we love range markets, because once you get your entry, it's just leave that runner target, leave that target on the other side of that trading range. All right, guys? Boy, I'm getting excited just talking about this stuff right now. This is why I love doing these videos every evening on the YouTube channel. That is the game plan for tomorrow and some variations, just in case we don't get my favorite trades tomorrow on the S&P and Nasdaq. Wrapping things up here, don't forget, guys, tomorrow morning, 8 o'clock Eastern time, the easiest way to start making money in these markets is to come out and learn and trade along every morning in our trade room. I'll put all the important links you need in the description of the YouTube video. As always, start first with the free video classes, learn the roadmap, start making money on your own. Everyone loves the free video series. Any issues getting started, please don't be afraid to call the office or use live chat. Any trouble getting access to our free video class, we're always here to help out with tech support stuff along the way. Right, guys? Fantastic day today. Hopefully another one coming tomorrow morning, 8 o'clock Eastern time. Hopefully I will see you there. In the meantime, be well, be nice to each other out there, and be here next time, will ya? Adios, amigos. Bye for now.